Imagine walking into a supermarket, the aisles filled with a variety of products, each with its different purpose and value. This, believe it or not, is a lot like stepping into the world of the stock market. The supermarket aisles can be seen as different sectors in the market: the tech aisle, the healthcare aisle, the energy aisle, and so on. And the products? They're the stocks from companies that belong in these sectors. But just as not all products are the same, not all stocks are the same either. In the grand supermarket of the stock market, there are two types of products you can buy: common stocks and preferred stocks. Common stocks are like your everyday items. They're more common, hence the name. Preferred stocks, on the other hand, are more like the premium products with some additional benefits. Just like in a supermarket, in the stock market, you have a choice between different types of stocks, common and preferred. Consider common stocks as the everyday items you'd buy from a supermarket. They're more popular and widely used. When you purchase these stocks, it's like owning a piece of the company. Yes, you heard it right. You become a part owner of that company, but it's not just about ownership. It also gives you the privilege to vote at the company's annual meetings. Now let's talk about the benefits. Common stocks often come with the potential for dividends. Think of dividends as your share of the company's profits. Plus, there's the potential for high returns if the company does well. However, just as you might buy a product from a supermarket that goes out of date, there are risks involved with common stocks. The company might not perform well, or the market might take a downturn. So, common stocks are like buying a product hoping its value will increase over time, but there's also a risk it might not. Now, think of preferred stocks as the premium products in the supermarket. They're less risky and provide more consistent returns. These stocks are like your favorite branded goods, offering a fixed dividend, much like a guaranteed taste. They have a higher claim on assets and earnings, similar to how premium products often come with better customer service or warranties. However, they don't come with voting rights, like choosing the flavor of your favorite snack. Preferred stocks, then, are like buying a more expensive but reliable product that gives you consistent benefits. So, what's the difference between these two types of stocks you can buy in our financial supermarket? Well, common stocks offer voting rights and potential for higher returns, but come with more risk. Preferred stocks, on the other hand, provide stable dividends and less risk, but don't offer voting rights. In the end, whether you choose common or preferred stocks, or a mix of both, depends on your financial goals, risk tolerance, and investment strategy. Just like shopping in a supermarket, it's all about making the choices that best suit your needs.